Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over basically the slowdown in momentum on the Bitcoin chart, even as some of these altcoins just continue to pump, sell. Oh my goodness, what are you doing, sir? Anchor, look at this one. I know our friends over at the AR Collective were looking at that one, and of course, there is Zcash, one that I had intended to catch, but I did miss just by my own kind of negligence. Just forgot to set up that trade, but that was a beautiful setup on that one. And so, of course, there are a lot of coins here that are just doing a great job, even as Bitcoin continues to struggle. And so let's just go ahead and see what stocks are doing. Of course, stocks are pulling back after that kind of huge drive to the upside that they've been having. Profits being taken on Google and some of these, names like Apple, which of course is going to take the market down with it. There's Amazon, but these don't seem like extreme markdowns, right? Like the market doesn't seem to be panicking or anything. We're basically seeing a little bit of a shift to some of these other markets. These different sectors are just benefiting at different times. And so we are seeing some relative price stability compared to the huge volatility that we've been having over the last couple months. And it's overall still a bullish look, even if we have to admit that momentum to the upside is slowing and that we haven't been able to keep that acceleration. So, what's going to happen next? Well, if we're looking at the Bitcoin chart, of course, we are putting in one of these patterns that I really don't like to see. I don't know if it'll play out, but you see these three spikes right here, right? It's kind of like even we have a couple of them right here. We have kind of like three spikes right here. This type of a pattern, it's basically an ascending wedge, but just a little bit choppier. And so, what happens is they tend to break to the downside. Okay, they tend to break down. It kind of comes as your parabolic growth slows down. You start putting into these kind of like these stretch goal reaches, right? But you're never really able to reach your goal. The market starts to get suspicious, you're not going to reach your goal, and then there's some pullback, right? And then maybe you put in a higher low, and then you go and make a higher high, or perhaps you just completely collapse and you drop down another level. So what we really wanted to see is Bitcoin to maintain its momentum, and unfortunately, it's starting to lose it. If we just go ahead and zoom in here on the daily, you can see we had a very ugly candle. We've been talking about these bearish kind of candle formations, pardon me, that we've been putting in at the top of these peaks, and it looks like that this is just the latest, kind of bearish formation. And for me, this does suggest that potentially we're going to be driven to the downside. And one thing that I don't like about it is that I did set that standard that we needed to hold, a couple 4-hour candles, preferably a couple 8-hour candles above 24,000, and instead we just got this really, really skinny kind of wick, right? And so we didn't hold above 24,000. We're now at 23,600, back to the middle of the range. The problem is, guys, that our momentum is going to be held here, basically above 23,500. You can see our 9 EMA in that area, maybe a little bit of leniency to 23,400-ish, right? But if we lose that area, we're probably going down to 23,000 and then probably lower, okay? So is this a good look? No, I want to be above 24,000. That's been my standard for basically the last week, okay? And we've just had this choppy sideways action as we've been slowly and slowly losing momentum. Now we have had these kind of like huge bursts, right? These huge bursts to the upside, And this was a brilliant 10% move. Guys, did you get in on that with us? Like here at Alpha Commission, we were talking about what the numbers would have to be on the CPI data in order to have a bullish pump in the market, and we got that. We beat the CPI's expectations, and that the fact that we were at support, right? The fact that we were at support on the chart suggested that you could have taken an entry there and had a nice 10% move on Bitcoin, which for altcoins, right, could have been as much as like 30%, right? Some of these altcoins do 3 times what Bitcoin do. They do 5 times what Bitcoin can do, right? So you could have seen some moves of, 10% basically, to like 50%, increases on whatever your favorite coin was if you happen to be in a good one that had a valid setup. It probably pumped up with Bitcoin, and that was an incredibly profitable day for the last, couple days. However, since we have had that retracement, that exuberance wore out, way too fast. If you weren't able to catch the top, we're still ahead of where we began. Like we're still bullishly progressing. We have higher low, higher low, higher low, higher low, higher low, and we still have a higher low if we end up just sitting here, right? And then what else do we have? High, higher, high, higher, high, higher, high, higher, high. Guys, we are in an uptrend, and the fact is that Bitcoin has increased, 42% on this run. And when Bitcoin increases 40% or more, don't take my word for it. Do a Google search, research it, right? Whenever Bitcoin puts in a 40% run, we call that a bull run. A bull run. And what have stocks done? Stocks have increased 20% on average between the different indices, right? And so, what do we call the stock market when it puts in a run of 20% or greater? What is it called? It's called a bull run. Now, there's no real set definition for things like recession and bull market, those type of things. And so different people can have different qualifications, right? Of course, we do have standards that we apply as an industry and that we kind of hold on to, but it doesn't mean that it always makes sense to frame it in a certain way. And so while most people use the term bull run and bull market interchangeably, I would like to suggest that a bull market, right, is different than a bull run. So what I would like to suggest is for a bull run for Bitcoin is 40% plus, right, increase in one run, right? Like one run up basically, okay? But for a bull market, I would like that to be a 40% plus run up, right? Followed by confirmation, right? Followed by confirmation of continued bullishness. So what would that mean, right? What could that mean? That would mean that effectively, just because something runs up, it doesn't mean it can continue. And we have some pretty good examples of that. See this? This is a nice run up, right? We had a run up of boom, of 26%. Look at this. We had a nice run up of what was that? 46%. This qualifies as a bull run. But guys, can we call that a bull market? Right? These two terms are used interchangeably in stocks and in crypto, but I just would like to suggest as an industry that we change the definition slightly and that a bull run is one leg up of 40% or more on Bitcoin, and that a bull market is only when it receives confirmation of continued bullishness on the same scale in which it put in that 40%. And so here we have no confirmation of a continuation. okay? We only have confirmation of the one run up, right? On the macro level, this just looks like one leg up. On the macro level, this just looks like one leg up, and then it's followed by a leg down. In fact, quite a traumatic leg down. So I would suggest this is not a bull market. It's only a bull run. And so those people in our industry and in the financial industry, right, and in investing industries who use bull run and bull market interchangeably, I just propose that we modify it so that bull run is a 40% increase on Bitcoin, but bull market only qualifies if there is a a run down, right? Which could actually lower that 40% because it runs down. But then if it puts in a higher low and then continues going, then that's a bull market. And that could either be determined structurally by higher highs and higher lows on the macro, or it could be determined by, for example, what my friend Crypto Reda uses, right? Like some type of a weekly EMA crossing that would be bullish. And right now, what we can see is that our weekly EMAs are starting to turn neutral, right? They're starting to look neutral, but they do not look bullish. Okay, they do not look bullish. The overwhelming majority of them are bearish. And so, how can we call this a bull market? And that's a problem that the investing industry has in terms of definitions. That's not something that individuals really have control over. However, if we have a voice, we can suggest these type of things. Now, this is actually a 40% plus Bitcoin increase. Different coins will have different ratios, but we basically talk about Bitcoin as leading the market. And then, of course, the standard definition is actually 20% plus for stocks. And so, of course, this is going to be 20%, right? 20% for stocks, right? And that will meet the expectations, I think, for us not to get confused as to whether we're in a bull market just because we've had a bull run. And we shouldn't be confused about those things because so many times we just drop off a cliff after we have a bull run. But guys, I think we can still, just be so happy that we've had a bull run, right? We should be happy that we have a bull run. And the reason to distinguish these things is because some people may stay out of the market if they don't have a confirmation of a bull market. And some people may miss out on a bull run because they don't have a confirmation of a bull market, right? And so what we would like to do is to just make a bigger distinguish these terms a little better so that when we talk about the potential for a bull run, we're not confusing people by suggesting that it's now a bull market. A bull run could imply you should probably take your profit until we can confirm a bull market. And you do see that's what the industry is actually doing. It's taking its profit. The reason why this momentum is slowing is people are taking their profit. They're obviously selling off, right? They're not just accumulating. Some might be accumulating, right? But some might also be taking their profit after this bull run because they don't believe that we're in a bull market yet. They only see that we had a bull run, and so they think it's a good time to sell. So we have no confirmation of a bull market. Just wanted to get some definitions out of the way. This is what I'm going to be using when I talk about bull run versus bull market, right? And again, like the confirmation could be a, for example, a bullish weekly EMA crossing of the say 10 and the 20, right? Weekly EMAs. That would suggest something very bullish. For example, like this, where these EMAs like cross over each other on the weekly, then even if, we dipped down and we got in here, and then you start seeing something like that, this formation, right, this crossover here would confirm a bull market, right? We would have a confirmed bull market if we got a cross like that on the weekly, because every time you see this type of a crossing, right, like right here, you have basically a bull market. And when you see the reverse, you have a bear market. Okay, so this type of a definition, um, I think our industry can be a little bit more specific, right? We can be a little bit more specific. And for example, like when we're talking about definitions of recessions, etc., it's probably not enough just that GDP goes up or down, you know, 2 months, 2 months in a row or 2 quarters in a row. Pardon me. Uh, how much does it go down? How many jobs are lost, right? Like there should be a little bit of nuance to that. It shouldn't just be GDP goes down 2 quarters in a row. Because what if you have artificial stimulus for like 2 years prior to that first quarter? And of course GDP is going to go down that first quarter. But that's because it was artificially pumped up to begin with, right? And so, when there's debate about these terms, are we in a bull run, right? Are we in a bull market because we've gone over 40%? That sort of thing. People can have these debates and it's very confusing. Are we in a recession or are we not in a recession? Well, did the first quarter count or not? We didn't lose jobs in that first quarter. We grew jobs, right? We do, we lost GDP, but we only lost a fraction of the GDP of the fake pumps, right? From the stimulus money that's been in the economy. And so, reasonable people can disagree about these type of terms, but as an industry, we need to have a little bit more clarity. And so I would suggest, at least for our industry, right? I would suggest these type of definitions, right? But for the bigger markets like stocks and the macro economy, I can't change what politicians think about that stuff. But I would just suggest there should be some tolerance. There should be a specific number of lost jobs that are part of a recession definition. And why is that important? Because, guys, if the news is constantly talking about recession, 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 and they're constantly talking about, all of this GDP loss and all that stuff, and we don't have standards related to it, and if we're just talking about, oh, just 2 quarters in a row of any reduction of GDP, like even like the smallest amount, then we're going to be very confused, right? The people in the market are going to be very confused. They're going to be very unsure of how to behave. So we need better standards of how many jobs are lost, right, to qualify as a recession. If we're growing jobs, right, or jobs are just staying flat, that doesn't really sound like a recession. It just sounds like GDP is coming down because there was a bunch of stimulus money in the market previously. That's different. That's different than in recessions where people are just losing their jobs left and right and they're like in panic because they can't, feed their family. On the other hand, we have a situation where we're having inflation, and inflation is the problem, not the recession. And so we have to make these distinctions. And it's very important because that will change how much we emphasize the decisions that the Fed makes versus the decisions that, for example, businesses are making, right? When they choose to either slow down operations or slow down hiring, those sort of things, right? And the amount of pay that people get. And when, if we don't have clarity on these definitions, then a lot of people are going to miss out on things like little bull runs that we have. And a lot of people are going to be confused thinking we're entering bull markets, you know, and they're just not going to know what's really going on. So our industry needs to do a much better job at defining things and helping people understand what is the macro situation that we're in. And that's part of what I hope that this channel does. Of course, I can't answer all of these things in one episode, but I hope that over time that we address these issues because I know a lot of people were freaked out. Were freaked out. They were too freaked out to enjoy this 40% pump, okay? And if we look at stocks, guys, if we look at stocks, like don't be confused here. Look at how much we've dropped. We've almost gained like like 23% on stocks, guys. That's incredible. Look at this. Look at this, right? We've If we do that again, we're going to be at our all-time high. If we do it again, we're going to be at our all-time high in the stock market. So how did you miss out on the entire run-up of the stock market where it basically recovered 50% of how much it dropped? It's because people were scared. It's because they were scared because this industry doesn't do a good job at definitions. And people are thinking, oh, we're in a bear market, but we actually have a bull run, right? And now we have the reverse situation where people may think we're in a bull market because, the definition of a bull run and a bull market aren't very clear. Because people don't understand, fighting inflation versus fighting the recession. They don't understand how those things work together. They don't understand where the spike came from, right? Our industry is just not doing a good job at explaining these things to people. And I hope that my channel continues to develop to such a degree that people get a better understanding of what's going on. It is a learning curve. You do have to intend to learn. It can't just be, I'm not just giving passive signals, right? And so you do have to intend to learn. But basically, guys, we're still in the same area. We're still in the same area. Look at this. We're dead center. We're dead center in the middle, right? Look at this. Look at this. We're dead in the middle of the range that we need to beat in order to stay bullish or to break bearish. And so right now we're having a pullback. But is it the end of the world? Everyone's freaking out. But guys, we just pumped 10% on Bitcoin. That's huge. If you could make 10% every day of your life, you would be a billionaire in no time. A billionaire, okay? If you could, if you can just take your profits at these normal points to take profits, right? You're going to be fine, guys. You're going to be fine. Bear market, recession, blah, blah, blah. You're going to be fine, right? Now we are developing more of this ascending wedge versus the accumulation wedge that we were hoping for, right? Kind of hoping for this accumulation wedge. Let's see what happened here. Kind of hoping that we were going to have the accumulation wedge like this, and that was what was going to happen is that this was going to be accumulation, and that we're going to pop up, come back down, and then boom, right? Boom. Hopefully that would have happened. That would have been the market accumulating, and then, maybe just doing some type of a test, retest of that breakout. It happens a lot during breakouts, and then going for it perhaps to like 29K, right? 30K, maybe even to 33K, who knows? But what happened is we broke back down into this accumulation wedge. And the problem is that we put a wick that kind of validated this ascending wedge. And so this accumulation wedge looks it looks like it may be not correct. Right? We don't know yet. We don't 100% know. We're just in the middle of this momentum area that I've carved out here. We don't know yet. We have like one last chance, guys. We have one last chance. We can't break down from here. But if we lose this area, almost guaranteed we're dropping down, okay? Just be aware of that. And the ascending triangles tend to break down. The accumulation wedge tends to break to the upside, but the ascending triangles tend to break down, right? Something like this. And then we'll find out if we put in a higher low or if we put in a lower low, right? Now, if we do end up putting in a lower low, I've mentioned this before on this channel. I've mentioned this before. It's not the worst thing in the world. Because what could end up happening, it could end up becoming the best thing in the world. Where if we have a lower low on the price here, but then on the RSI, we put in a higher low, that's going to be a bullish divergence. We'll be able to make a bullish divergence if we get this higher low on the RSI, but a lower low on the price action. Now, some of my, kind of hero traders that I follow, kind of like a Crowns, Crypto Cave, they're talking about this bearish divergence, there's bearish divergences, forming all over the place. We know that. We've been having smackdowns. We've talked about bearish divergences before, and that's very important to follow that because, of course, we're increasing our chances of a breakdown here. Not only with this formation, but also we're on divergence watch, right? We're on bearish divergence watch. We're having EMAs, as I mentioned in the last episode, hovering over our heads. You see this? Smacking us down. Like here on the 8 hour, you have the 200, we got smack down here, smack down here, smack down here. It looks like it's smacking us down again. And then this 300 is just coming in and joining in and just brutalizing us. We tried to pop up past the 200 and the 300 said no, get back down below the 200. Now, these EMAs don't control price action, they reflect price action. But this is a good way of visualizing what's going on, okay? And even during these bullish crossings, which this is a bullish crossing, this is a bullish crossing, this is a bullish crossing, whenever we have those bullish crossings, we tend to get smackdowns. That's the Alpha 9 smackdown. Okay? It's a bullish crossing that ends up smacking you down nevertheless. But look, you see this? You see this here? It ended up supporting us. You see this purple one ended up supporting us, right? The orange one could actually end up supporting us down the line. You see how this could work out? We get smacked down. Yeah, we have a lot of trouble. Fight our way back up. And then what happens is this orange line comes up here, and that one of these days it ends up supporting us on our way up. And that would be another Alpha 9 smackdown. I call it an Alpha 9 smackdown because it happens with the 9 EMA the most, right? I mean, the most people are using the 10 EMA or the 9 EMA for those kind of like short EMAs, and you can just see it happen time and time again on the 9 EMA, and so that's why I call it the Alpha 9 EMA. Some EMAs have equivalents on different time frames. You see that smackdown over here, all right? That's a 9 right here. But you jump to a different time frame, it's a different EMA, right? See these colors changed, right? So it just depends on which time frame you are on. So it doesn't matter which EMA I call out because on a different time frame, the different EMAs become a different EMA, right? It just depends which time frame you're on. So I just call it the Alpha 9 knockdown because it's basically whenever this bullish crossing gets here, and I'm trying to point it out when it happens. So I mentioned that we were having these type of crossings over here, and most likely we're going to have some pullbacks, and then of course, like the tougher one, the tougher EMA, the more kind of bearish one, tends to restrict us. And sure enough, as soon as we poked to it, dropped down, right? See, we had the knockdown right here, and then we fought our way back up, but then we touched the tougher EMA basically, or the tougher MA, and then it smacked us down again, and then we made another attempt, right? So like these EMAs, like they really are interesting. It's really interesting to follow their quirks and follow their pattern behaviors. It can give you a good clue as what's going on. And so again, guys, like we're putting in bullish crossings like on these things, and if we don't get smacked down too hard where we break them all and they turn back bearish, then what could happen is they end up flattening out Maybe we put in a lower low, but our RSI puts in a higher low. We get some bullish divergence. We pop up, on these higher time frames. We just pop up, and then maybe use some of these EMAs as support as they come around. And that would be pretty cool. That would be pretty cool. That would be something like this, right? You can see this orientation right here of these EMAs looks very suspiciously similar to this one right here, right? Look at that. Look at that. And then what happens? A major knockdown, right? But it fights its way back up, and eventually it uses those same lines which had bullish crossings, right? The bullish crossing gave them an alpha 9 knockdown, alpha 9 knockdown, alpha 9 knockdown, but it was a bullish crossing, and so it eventually lifted them up. And then, the chart maxed out because, of course, the macro was very bearish, right? Very bad. All the Russian war stuff was breaking out. All the interest rates were being hiked. All of that stuff was going on back here. So how much has the market priced in? Is it possible that we could have bottomed out, or is there more to be priced in? That's the question we're going to find out. But nevertheless, this possibility still exists for a bullishness to the upside, and our EMAs are telling us we just might not be ready yet, guys. We just might not be ready yet. So hang on to your hats because we might have a wild ride. And, like here, it could be a higher low, right? This was a higher low, or it could be a lower low, but I want a lower low because that would give the highest chance for a bottom to this market. Put in that bullish divergence with the RSI and just go for it, guys. Like that would be the most beautiful thing that we could see is a lower low with a higher low on the RSI and then a bottom of the market, confirmation later on, right? Perhaps like my friend Retta's style, right? Or perhaps, just some structural confirmation. But either way, the EMAs will follow us, right? They will also tell us what's going on. And so, yeah, I'm sorry once again, I have to report the chart did not make a confirmation. It did not make a confirmation to the upside. It did not make a confirmation to the downside. And what we've been following, right? If you've been following me for the last week and a half, we've been following the 4-hour signal, which pumped us up. I told you that 4-hour signal was so bullish. That 4-hour signal was going to make its best attempt. And then what did I tell you? All right, I told you then we had an 8-hour signal. And that 8-hour signal, right? What was it about the 8-hour signal, guys? Do you remember? This is just like a pop quiz, right? The 8-hour signal. The 8-hour signal is the one that has the fake outs. Fake out up, 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 and then dump, 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 dump. Are we going to dump again after a fake out up? I mentioned this for like a week. U-shaped before a nosedive. Fake out up, then harsh down. 10 to 45% move with a typical range of about 20 to 30%. What do we have going on here? The signal fired, and I mentioned sometimes there's one fake out, sometimes there's two fake outs. Was this the second fake out? Are we going to have those two fake outs for this 8-hour signal and then a harsh dump of 20 to 30% typically? That could put us anywhere between, like 19,000 to even 17,000, right? The most extreme, right, is a 45% dump. And wow, I can't even draw that. I think it takes us really low, guys. The most extreme on this signal is a 45% dump. And that thing would take us to, yeah, 13,500. that kind of $12,000, $14,000 area. So watch out, watch out. Like that 8-hour signal, right? This 8-hour signal that I've been telling you about that's happened only what? How many times did it happen? Right? 8 times? It's only happened 8 times in the last 6, 7 months, right? Oh man, 8 months. Man, this year is flying by. So it's only happens like it only happens on average once per month, sometimes clustered, sometimes not. In fact, these all might just be the same signal just playing out. So this might even just be one, all of these 4 signals right here. So maybe it really only happened, 4, 5, 6 times, right? Like a clean signal, right? Maybe it only happened 6 times in the last 8 months. So it's a really important signal to watch out for. When it happens, you don't want to ignore it. Yeah, there can be some stutter of time. Look at this. Look at this one right here, the previous one that we had. Okay? We had the signal right here, and then we had one fake out, two fake outs, and then right? What was that drop? 45%. That was a 45% down, drop down. That was the maximum one. 45%. So signal, fake out one, fake out two, drop of 45%. What do we have going on here? Signal, fake out one, fake out two. What's coming next, guys? Because these were two fake outs to the upside. What's coming next? I don't know, but I've been warning this to you, right? I've been giving you warnings about this for the last week and a half. I hope you're prepared, okay? Don't say I didn't warn you. I've been warning about this and all these volatility, episodes for the last week and a half. So pay attention. Now, of course, we do have to just remember that, as long as we are holding above that $24,000 area, and now we actually have to kind of get above this $25,000 area, if we're just honest, because we have put in price action up there, right? Like we kind of have to get in that $24,000 to $25,000 area. We have to really put in some serious candles up in this area if we want to have that volatility pop to the upside. If we're just down here at 23,000, or God forbid underneath 23,000, then most likely this is going to break to the downside and that volatility is going to break to the downside. Minimum 10%, maximum of 45% by the historical standard in bear market conditions. Pay attention to this. I'm saying it for a reason. Pay attention to it, right? And then there's something else going on, right? I told you there was going to be a new signal at play. And guess what happened? It's now initiated. Okay, so now we have the daily signal. Now we have the daily signal initiated, and daily signals are very strong. So we have a daily signal initiated. You see this crossing right here? They finally crossed. Yeah, we had the warning, but they finally crossed. It's initiated. And when it initiated to the downside. So is this what's going to be what drives that 8-hour signal to the downside? The 4-hour signal was so nice, right? That 4-hour volatility signal was so nice to us. Let's go over here to the 4-hour. That 4-hour volatility expansion, that was all to the upside, baby. See this? Low volatility pushed up, expanded to the upside. Little bit of a pullback, no problem. 4-hour signal had our back, pushed us back up, right? Then we kind of maxed out on that 4-hour signal. You can see we broke under our EMAs, right, on the 4-hour signal. Now the 8-hour signal took over. It's the 8-hour signal's turn, right? Full control by the 8-hour now. Oops, that's 8-day, 8-hour. And what about that 8-hour signal? Well, tends to move to the downside. One fake out, two fake out. Hopefully we don't just scream to the downside. So the question is the daily signal, which has its own characteristics, is this thing going to be able to override that kind of 8-hour history, that 8-hour signal history to the downside? Is it going to be able to override and perhaps push us in an upward direction? Well, so far, as it's been executing to the downside. So I'm not that hopeful. Not that hopeful. I'd be protecting my capital. As soon as we lost 24,000, I would have just started protecting my capital. Right? As soon as we saw this crazy wick being formed, like I would have just started protecting my capital. Okay. Look at this bearish candle. Look at this bearish candle. Look at this bearish candle. Right? These three genderless, racially ambiguous crows right here. Right? Really bearish candle. We wanted to go up, but we got a bearish candle. We haven't broken anything yet. We haven't broken anything yet. We're still in that zone of decision that we've been in for like a week as we've just been going sideways. You know, it moves up a little bit. Every day it moves up a little bit, the zone. But we haven't broken it yet. We haven't clearly broken it to the upside, and we haven't clearly broken it to the downside. It's just kind of chugging along as we're losing momentum. All right, you see that. You see we're losing momentum. Doesn't look quite as strong anymore, does it? Just looks like we're losing momentum. Flattening out. Potentially going to drop off of a cliff if we don't get some type of upthrust somehow. What's that probably going to look like? Something like this, and then we would have to do something like this, right? Just boom, break out, boom, keep going. That's a lot of work. It's a lot of work to ask, with this bearish candle. What's more likely to happen? Something like this. Not trying to scare you guys. I've been trying to be my best at being bullish, at being positive, at being kind of like upward. We're at the lower 1/3 of this chart, guys. We're on the lower level, right? Since these all-time highs, like we're there, guys. Like we're in the last 1/3. We don't know if we're at the top of the last 1/3 or at the bottom of the last 1/3, but we're pretty much in the last 1/3. Do we have a bear flag that's going to take us much lower? Maybe. Could we just double bottom right now and just keep going up? Yeah, maybe. Right? But we just got to take it like one signal at a time. And so I'm trying to find another way. I'm trying to find another way of potentially giving us a heads up. We had a stretch goal, we weren't able to make it. So are there some type of signals that can perhaps give us a clearer direction? And so I've been trying to analyze various signals for the past couple years that, might give us some idea of the top of the market versus the bottom of the market. And I've got a pretty good one. Let's do auto. Got a nice warning signal up here. Got a nice buy signal up here. Sell signal here. Buy signal here. Sell signal here. Buy signal here. Sell signal here. Buy, sell, sell. Got a buy signal here. That would have been a great area to buy. Yeah, you're not going to get the Pico bottom, but got a signal here, got a signal here. That would have given us a nice 20% run on Bitcoin. Unfortunately, I'm also getting a little bit of a warning signal here. And so what I'm going to be looking at is to see if we can find any signal that might suggest time to get out, right? We're kind of getting that. We're kind of getting that. You know, our RSI, depending on which settings you use, our RSI is looking like it's got a little bit of a lower high to it. Whereas the price action is making higher lows, RSI is kind of double bottoming. Whereas the price action is making higher highs, the RSI is making lower highs. See the same thing on the DI. ADX still going up. But DI kind of softening. Nothing terrible so far. Nothing terrible so far. Just a little bit of a heads up. Just a little bit of a heads up that this thing might want to reverse. And so if I get a pretty strong sell signal, or if I get another buy signal, right? I mean, this is stuff I have to analyze myself. It's not like an indicator that somebody has made. I'm just analyzing various different factors together. But if I get a pretty strong sell one or a pretty strong buy signal based upon my analysis, I'll let you guys know. But you understand that for the last week, week and a half, we've basically just been consolidating sideways, right? Let's go to the 4-hour chart. Just zoom out. We've just basically gone sideways. Literally just this kind of little area right there. That's all we've been doing. That's all we've been doing. Basically almost nothing since, you know, the end of July. Just consolidating. So you haven't missed anything. You haven't missed out. If we keep going up, you're still extremely in a good position. If we keep going up, you're going to be so happy. And if we go down, you're going to be so happy that you didn't overinvest, right? And that you weren't locked in. So don't worry about it, guys. Don't worry about it. We're just in an ambiguous zone right here. Just an ambiguous zone. Got a lot of volatility potential building up. We're gonna expand pretty soon, either to the upside or to the downside, in probably a dramatic fashion. So it's totally cool if you just want to protect your capital. Don't get stressed out by this stuff, okay? Yeah, we've been bouncing around in this little triangle, but you didn't miss anything, okay? Like we're still good, still good. We didn't get the pop up to 29 to 30. We haven't gotten a pop down to 18 to 17. We're just thinking about it. The market is thinking about it. One of those two things is most likely going to happen, all right? You haven't missed anything, okay? Some people trying to make you feel bad because they got in certain positions. Like we got into Kadena, like when Bitcoin was down here, right? We got into Kadena and kind of like wrote it up. And you know, people can feel bad if they didn't get in on that. They may think they missed out. But no, look, this thing most likely needs to make some type of a low. We're putting in kind of a high. Probably we need to make a low at some point, right? I mean, we could pop up, but we'll still need to make another low. Like we'll have to make a low eventually, so you're always going to get a retracement. And then you'll have confirmation at least if it is bullish. And if it's bearish, then you'll be glad that you weren't stuck into some high position. That's why the motto of this channel, always be taking your profits, always be selling, right? In a macro downtrend, always be taking your profits, always be selling, because we don't know when we can just dump off of a cliff. Now, Ethereum is going crazy. So Ethereum might be showing us the way, right? There is nothing bearish about this. Maybe this thing could just go, right? Could just go for it. But do I think that's going to happen? Not sure. We have to wait for the momentum to build up to the upside or to the downside. All right, guys. This has mostly just been kind of a philosophical episode because, again, like we're just doing the same thing that we've been doing for the last week and a half. Okay? Yeah, we caught the Fed play, we caught the CPI play. Awesome. Like that, the Fed play was super bullish. The CPI play was super bullish. And if you got in on that with us, congratulations. Congratulations, Alpha Fam. You did it, okay? If you got in with us with Kadena, at the bottom of the market here, congratulations. If you played this bull run, congratulations. But don't think for a second that we have a confirmation of a bull market. Don't think for a second that we have a confirmation that this is only up from here, okay? There's a good chance that we can just drop off of a cliff, and it could be harsh and it can be punishing. So pay attention. Pay attention. Keep your wits about you. Be a clever little alpha monkey. Don't be a perma bull. Don't be a perma bear. And don't feel bad. You haven't missed anything, right? You haven't missed anything. Literally nothing. We've made these little platforms before. Okay, we've made these little platforms before. You didn't miss anything. This is just one price. Look how many chances you're gonna have. Look how many chances. Okay, both up and down. This is nothing. We've seen it before. We've done it before. Just play the range. If you just think about the range and you don't think about missing the absolute bottom or missing the absolute top or that kind of thing, then you're not going to feel bad. You know that you're going to have a chance after 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 chance, right? Chance, 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 chance. You're gonna have so many chances, right? You just play these little ranges. Just play these little ranges every chance you get. Don't worry about missing out, okay? I know a lot of people feel bad. This has been a very tough bear market, and we're probably still in a bear market. We haven't confirmed anything, guys. We had a bull run. Past tense, had a bull run. We now lost it, right? We've dropped down. We're under that 40% now. We lost our bull run. We had a bull run. We've lost it. We're losing our momentum. We haven't confirmed a bull market yet. All right, guys. That's your alpha for the day. Stay safe and happy trading.